Today was insane. A massive rally happened on S&P 500 right off the level we shared with you guys on the weekly recap video. Literally, this is the level. I'll go to the daily chart here on SPX. This is the level of the channel we were trading within, the one that started all the way up here. If you drag it down from the pivots, it's the same one that we shared with you guys on Monday night. Nothing has changed. You drag it across, it's the same support that we used prior in May, and now we actually had two daily closes above this level, which I said in the video, if we had two daily closes above, it would be bullish. You can look back and check on that as well. We had two daily closes above, with the one right here and the one yesterday, and then today we just closed and had a massive rally to end the day. So we had three daily closes above, and this brings a very interesting dynamic to tomorrow on Friday, but then also all of next week. So in this video, I'm going to share my plan going forward. So to leave no doubt, earlier today I posted on the Cheddar Flow account when we hit this level, and so we had a very large bounce off this level. This is a very good sign at bullishness going forward because of this 15-minute candle right here. As we touched this level, it bounced off and had a very strong close above. It consolidated the next 30 minutes and then had a massive green candle after that. That is a very, very good sign, along with the fact that we got back into this channel that I have in purple. You can see here, this is the support, and then this is the resistance up here. We fell below it, and typically this is considered a bear bait because we are below a channel from prior, and a lot of bears tend to get into this. So if you see signs of strength and a strong bounce off of it like we did here, that can lead to a rally later. Now, did I expect a rally coming later today? No, I did not. However, I did add on this level that I talked about in the weekly recap video, this line specifically, because it's a very crucial support for us to hold, especially on the daily today, which we did. We bounced off very hard. The fact that we had this bear bait over here and then got back into the channel led us to have a rally end of day going into power hour. Also, the fact that there is a head and shoulders on the 15-minute chart that we had here, this tends to bait in a lot of bears, especially because this is a perfect area to short off of to the downside. However, this level right here was the key support. This is why it ended up bouncing, and then once we got back up over this level like I shared with you before, this prompted that rally because all the bears that were getting baited over here needed to cover their positions, and that's also why we didn't have that much volume coming in afterwards. This is a lot of just short covering that led to this rally right here. So that's one key thing to note. Yes, this is a head and shoulders. However, you also need to look at the bigger picture. So if we go to the daily chart here, the bigger picture is this is the inverse head and shoulders chart. So you can see right here we have the left shoulder right there, we have the bottom for the head, and then now we just formed the right. And right now, as of now, this looks like it's ready to break out and potentially gap fill this first gap here, which brings me to my next point that I want to share. As of now, like I said, we have very good potential to continue upwards. However, as always, the market does not have 100% certainty going forward. My bias is certainly to the upside, and I certainly think we will gap fill this within the next 3 weeks or so. However, as always, I need to give you guys the other option in case it does happen for some reason by tomorrow. If we were to gap down, based on this 15-minute chart, if we were to gap down back below into this channel, or especially below the bottom of the channel right here, this purple line that I had right here, if we were to gap down below either of these, and we were not able to reclaim getting back over this purple line that I have, and then that would actually start to be very bearish. The most bearish scenario is gapping down below this purple line for the channel, the bottom, the support of the channel you can see right here. If we gap down below that, that would be very bearish, and I'd have to cut all of the longs that I added today. I did trim near the end of the day because you never know what could happen overnight. However, I still have a good exposure for now. I need to cut all of that, especially if we had a big gap down, because that would be a very big bull side fake out, and we actually saw that happen with Apple before the prior drop that we had. If you remember a few weekly recaps ago, you can see right here, look at that, same exact thing. And this is how you know someone's kind of like been around and has experience with trading. You can reference prior outcomes from different setups. We had head and shoulders on the 15-minute right here, had that bear bait down here, and look, rally, end of day, had a massive close. This is a very, very bullish daily candle right here. It closed at the top of day after going throughout the entire day in bull formation, and the next day, major gap down, formed a bear flag, and then look at that, short right off of this, and just massive downside afterwards. So you have to be very careful because obviously anything can happen. However, as of now, just based on the chart, this is a bullish chart, especially on the daily and how we closed. So going forward, it does look good. Now, another thing I do want to talk about here, we had a lot of dark pool prints around this range that we were trading within. I'll actually go to SPY here really quick. So we had a lot of dark pool prints, especially on the way down. We had a lot of signature prints coming, hitting the tape here. And we also had 3 over $700 million prints within this 372 to 375 range within the past couple days. And that's a lot of premium going into this, especially for SPY in terms of the singular print. Remember, these aren't signature prints. These are singular. Plus the fact we have an inverse head and shoulders. So that is a lot of bullish emphasis going into this. I personally think because we already had a fake potential breakout to do the gap up here. You can see right here they baited us, the bulls here. They baited all the bulls into thinking that we were actually going to fill this gap down that we previously had here. You can see on the daily candle, and it actually sold off later that day and then continued to sell off after. So a lot of people got baited into thinking we were going to fill this gap up, and it didn't happen. So I like that that already happened, because that leaves us more room for a potential to do it in the future here or near term. So because they've already done a fake out, they got it out of their system in a sense. Now we can potentially fill the gap here, which would be very big. That'd be around 390 to fill that gap here. So that's kind of my target for now. Other people are already looking at the fact that we have 2 gap downs. I personally think we won't get over this gap up, or this gap down here. I don't think we're going to fill it anytime soon. Is it possible in the future? Yes. However, I think we'll see another fake out if we did get up to this level later, like within the next 2 or 3 weeks. If you got up to this level later, I think we'd see another fake out like this before some more downside first, just because these gaps tend to bait in a lot of bulls. They want to have it fill. So the market maker tends to do a lot of fake outs along with it. Another thing I do want to talk about today is this upward wedge pattern on SPY. So we did trade within this wedge for a few days, all the way going up right now. And actually, as of today's close, we have not reclaimed this wedge yet. So it does make it important that we want, or at least the bulls want, to have a gap up back into this wedge or above this wedge going into the future. Since we are below it still, it can be subject to some bearish activity going forward. However, as of now, like I said, the close was bullish, but I just want to make sure that we actually can get up above this wedge. Otherwise, it's going to be trading within here. And if we consolidate around this level, especially after a daily close like this, that's actually more emphasis to the bear side. We have seen some puts as well. Like this one we had after hours, we had a $4.5 million put for this 360 strike. We've seen a few of these for the 360 strike for the 715 expiration. So those are certainly bearish by all means. We've seen some that got pushed further back for the August 19th expiration as well. So you do have to be careful of ones like this. We haven't seen the sheer amount of them as we saw prior, especially when we were falling. Especially during like the big gap down frenzy we had, like all the way up here, we were seeing tons and tons of puts. It hasn't even been close to that yet in terms of the ones we saw prior. So that is a relatively good sign, or at least neutral sign in terms of flow right now. We have been seeing a lot of bullish SPY prints as well. So that is another thing you have to note. We saw 1.1 million for the 372, 1.1 million for the 375 today. These are shorter term expirations. Another thing I wanted to share with you. So a lot of the end of June, early July seem to be very, very bullish, at least the prints. And then once you hit that 715 and 819 expiration, that's when it starts to get bearish again in terms of flow, which can mean we may have some relief going forward, kind of like I shared with you earlier. Maybe a few green days going up, maybe potentially fill this gap here, but then after that there could be potential downside later on. So just some scenarios to note going forward. We had one last thing that I wanted to share, and that is Apple today. So Apple actually broke out of a channel that I've been posting for a bit on the Cheddar Flow Twitter account. So it was trading within the channel, and this is a very large channel, by the way, but it was trading within it for the 15-minute chart here, and we actually broke out of it today. So in terms of tomorrow, we definitely want to open back above this, at least if you're a bull. If you're a bear, you want to see it open below this purple line that I have right here and stay below on the daily. If it does that, then that'd be a big fake out yet again on Apple, and the market would go along with it. If Apple gaps down and stays below here, then that's exactly what's going to happen to the market as well. Another thing I just want to make sure you guys understand, because like I said, anything can happen with the market. I'm going to be quick. If we did gap down tomorrow, I would just cut my calls after that, and then basically be maybe even up still on them, or just break even. But always be versatile in the market. I need to make sure I share with you both the scenarios that can happen. Again, my bias is to the upside right now. However, anything can happen in the market, and you just need to be willing to get out of your position or get into a new position after. But otherwise, appreciate you guys watching this video, and I'll see you guys in the weekly recap.